Mike Zuzolo is back to Connected Farmer on our global ag trade brick by brick episodes to talk about the new trade developments and its impact on the commodity markets and the South American weather update. Right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So we are going to have a lot of information today about these trade developments, but first we want you to subscribe and we'll talk about the South American issues. We are having some drier weather in parts of Brazil and parts of Argentina, but still there isn't a significant change in the projections. How do you see it, Mike?
I agree, Luis. I was still watching the safrinha corn crop in parts of Mato Grosso, but I understand that Rondondopolis, for example, just received quite a bit of rain and very timely rain over the last week and has been able to play catch up along with some cooler temperatures. It looks like the corn crop is back on track. No one is wanting at this point, I think, in the private trade, wanting to disagree with the USDA on either the corn or the soybeans coming out of Brazil and Argentina. So we're still set for a record world crop, ending stocks number of soybeans up there in the mid 120 million metric ton level. But the trade continues to try and fight that bigger supply and tries to keep prices elevated as much as they possibly can. So far, a fairly impressive trade month here in April as we get the United States crop planted.
And so far, the China, with all these disputes, even there were these disputes, the still China has bought more from the U.S. in March than Brazil.
Yeah, that's an excellent point. This suggests to me that our thoughts that China was buying ahead of the tariffs on soybeans, and Mexico was probably buying ahead, South Korea probably buying ahead, both of those countries on corn and maybe some meal as well before the tariffs hit. But yes, when you look at the first quarter statistics from China, that shows very clearly about a 60% increase by volume of US soybeans and about a 60% decrease, plus or minus 5%, in volume in Brazil beans. And so I think many of our importing countries and trade partners played this very, very well, and they played it a lot better than Wall Street did as far as expecting and taking President Trump and his administration at face value. And I think the good news to that, Luis, is that we have not seen the cancellations appear in the export sales since the beginning of February when these tariffs were first announced. And that's a very good thing. And I think that helps answer, in part, why the soy in particular has been able to stay elevated and remain near a 1050 price. The other reason is probably because a year ago at this point, the futures price was around $15 for nearby beans. The last thing I'll throw out there, as far as the first quarter import data that you brought up, I've noticed that at the Gulf of Mexico, since the end of March, our Gulf bean price has gone up about 60 cents, 65 cents a bushel. And the Paranagua port in Brazil has remained about the same price since the end of March. And so now we are a higher price at about $11.30 compared to Paranagua at about $11. So between the tariffs, the buying forward, and our price premium, I think that we're probably going to start to see, along with that big South American Brazil harvest, going to see that switch over come like we normally do in May, where the Chinese really pick up a lot of Brazilian loads of beans.
Yes, and also very recently, the U.S. Has started to tone down on the negotiations with China. I think mostly because of the midterm elections that would come last year. And in China, they don't have this sort of inconvenience Uh, so I think things are starting to ease.
Yeah, I'm not in that camp yet, Luis. I could be in 10 to 15 days, 20 days. I think we're at a very critical point because the way I see it is that by putting a 90-day pause on all countries except China and then increasing Chinese tariffs and by the US and then the Chinese reciprocating with increasing their tariffs to us, both countries put more chips on the table in this trade poker game, if you will, and both are either bluffing or both are very serious. I believe, based upon the analysis, both are very serious, and that's why they're both going very aggressively towards and competing with directly each other in trying to secure India, South Korea, Japan, and the EU's commodity business and trade business. And I think, like a lot of things in geopolitics, whoever gets the most trade deals in the next 20 days will have the most leverage at the table, and the other side will probably have to acquiesce or shift in some way. And so that's kind of where I'm at right now. The best thing that's happened for us at this point in this and in the analysis that we've talked about has been accurate and very fortunate that it has been, is the dollar has continued to make new multi-year lows. That has kept, I think, the commodities in play, not as a sell signal, not as something you want to sell off. And the new record highs in gold have also helped support the commodities as well. So those are the features that I think are really important in, say, a month from now.
Yes, and many of these countries, like Japan or Thailand or South Korea, I heard today about India. They are committing to, as you mentioned, buying commodities, buying more agricultural products from the United States. Well, Japan, in the case of Japan, they are buying. There was unofficial talks that they would buy more rice and more soybeans. And so, how do you think that would play out?
Yeah, that's a great question. And it's very timely because I did about a 30-minute interview with a Japanese news service yesterday in the afternoon. And they were stationed out of New York, but it's a very large Japanese news agency. And in that 30 minutes, about 20 minutes of it was them probing my opinion about how serious President Trump is. How will U.S. farmers handle this? Will they stick behind President Trump? I think the Asians and Japanese in particular are very, very nervous. And even though they're a key ally of ours, they realize they have a very large economic and military neighbor right next door. I think South Korea is more likely to do a trade deal with the United States. I think India is more likely to do a trade deal with the United States. Vietnam, many that I've talked to are suggesting Vietnam, Thailand, maybe to a lesser degree Indonesia will try and stay with both countries somehow. But China's kind of squashed that in their latest update as of Wednesday. They spoke specifically of nations not doing trade deals with the United States. Otherwise, there would be kind of reciprocity. The European Union and Japan, I think, probably are more on the fence because more is at stake in that Asian trade belt, I think, between those two countries and China. And so I hope Japan sticks with us in the United States. I told that news service it's interesting because Japan was in the exact same position as China back in the mid 1980s with the property bubble, an extremely cheap currency, undervalued currency, exporting their way in their economy. That's how they drew such a big gross domestic product. And Ronald Reagan, President Reagan, in the United States went to Japan and said, "We need you to appreciate your currency so that we can create this overvalued dollar to come back down again." And Japan willingly did that. But as we see in this time with China, they're not as close an ally. They're more of a competitor strategically and economically, and they are not buckling. And I think that's partly because what happened after Japan did what they did, they had a lost decade of economic growth and deflation. Well, China's already in deflation right now. And so I really think they're in it for the long haul unless we get more countries to sign up bilateral trade agreements with us.
Well, there is a very interesting window right now in May and June. where in this time frame, China would buy more from Brazil, uh, but also there is only this month for Argentina to take advantage of the tax cuts.
Yeah,
So, what do you think is going to happen after June? Because it's more likely that the Argentine farmers will start to hold grain again.
I think I had heard that the Secretary of Treasury of the United States was willing to do a direct loan to Argentina this week. He reportedly said that. And I think if that's true, then the Milei government and the Trump administration will be able to work something out where Argentina will not be a direct competitor with US agriculture exports. And they will kind of take a pass on trying to supply Asia. I'm not sure they have the livestock industry built up enough and the hog herds and the beef herds at this point to really take on a lot more business from Asia anyway. And I think they really need the support of the IMF and the United States right now economically because of their inflationary problems. Again, I think you hit it on the nose. It seems to me in the next 20 to 30 days, we will have a lot more answers than we have right now in terms of momentum and who is likely to win, who's likely to lose.
And so, what do you think the seller, uh, in that case, the U.S. farmer, should be thinking of?
Yeah, this is an interesting point. I'm going to do a lot more research on this and send out some client only webinars and talk to clients about this in more detail. But we have already gotten into a situation, Luis, where our cash basis for new crop soybeans is somewhere anywhere from 65 cents below November futures to 80 cents below November futures. In some areas of Nebraska, I have found that they are $1 less than November futures. And so we've got this almost 10.30, 10.40 lead month bean price, $10 plus November bean price against this terrible basis and at the lowest levels in the last 5 years. And so what I could see very easily happening is the futures market sells off, but then the elevators and the cash merchandisers raise their basis by maybe half that amount. And the net price goes down for what the farmer receives, but your basis actually appreciates. And so 2025 for me, in soybeans especially, because of China taking such a large percentage of our crop and taking 50-60% of our soybean crop or in terms of exports overall, I think it's really important to separate your cash basis from your futures and your marketing and get to know what that means and how it works and utilize someone like me to do that.
And you see any crop doing having some major change in terms of price in this period?
No, in fact, I think what we saw last month in the acreage assessment by USDA was the USDA seeing that US farmers were preparing for weaker soybean prices and stiffer trade resistance in soybeans, not just because of the US China relationship that was still developing, but because the Brazilian crop looks so big. And I think that's in part why we saw such big corn acres. And so now the question is, do we get those corn acres planted on time? And can we support the idea of a 180 national yield? I'll also break some news with you, Louise, here. I've told clients about this already yesterday, but I was in touch with USDA yesterday, and I asked a very simple question. With these tariffs in place, will the May crop report, because it's going to reflect 2025 2026 marketing year for the first time since the marketing year began, will it reflect tariffs? And I was sent back a very good response from my contact, and he said they will deal. The World Agricultural Outlook Board, will deal directly with whatever is on the books. And so the May crop report, we are very open to the idea now that we could see some lower U.S. demand, export demand in some key agriculture commodities. So I'm trying to build that into my analysis and trying to get ahead of that before that May crop report comes out. In essence, what I'm saying is I want to sell rallies to hedge before the May crop report. I just got to get a rally first. And that's the key.
Yeah, and before we finish, I was almost skipping that, but you mentioned before our show here that there is an update about the transportation project in South America, most specifically about the Chancay in Peru.
Yeah, thanks for bringing that up. There was a big bilateral meeting between Brazil and Chinese trade representatives just about a week or two ago, and they are moving forward by the looks of it to what is called, some call it the Central Bioceanic Corridor, some call it the Capricorn Bioceanic Corridor. In simple terms, and we have a map of that here on our YouTube video. In simple terms, what that is essentially a transcontinental railroad for South America to be able to bypass the East Coast and the Atlantic Ocean, and therefore bypass the Panama Canal to get to East Asia, specifically China. Because as we've talked about before, Chancay is a port that is 60% owned by Costco China, 40% owned by the Peruvian government, and it has been built as a deep water port specifically to cut shipping down in about half the time directly to Shanghai from Peru. And that also lowers your costs by anywhere from 30 to 40% as far as freight costs. Now, this corridor is important because it was brought up just a week or two ago between China and Brazil. And it's important because it's what makes the Chancay port work. In other words, the Brazilian exports to Asia, Southeast Asia, around $250 billion in 2023. That's about 5 times more than what was shipped out of Peru to the same area. So you got to have Brazil linked up in this port. And that's the whole point. Let's get Brazil, Argentina, Paraguay, and Chile all linked up. And all of a sudden, you can ship anything from copper to soybeans to corn. I was interesting to note the top 3 exports so far shipped out of that port in the January through March time period, if I remember right, were avocados, explosives, and palm oil or soybean oil, palm oil, vegetable oil. So you can kind of get a flavor of what they're doing. And this, again, adds to the idea China's very serious about their trade situation with the United States. I don't think they're going to buckle very quickly because they have a lot of infrastructure already built up to be able to compete with us.
All right. Thank you very much, and you have a great week.
Thanks, Louise. You too.